Ladies and gentlemen, we have made it to Chapter 11. Chapter 11 has to do with cash controls, and as I mentioned in a previous video, cash controls aren't necessarily part of the accounting cycle, but they run parallel to the accounting cycle. You need to make sure that the cash, you're recording transactions in your journal and you're recording it into the general ledger and you're keeping track of how much cash you have, but you need to make sure that you actually have that cash in the bank, and we do that through the use of some cash controls. There's two ways that we can protect it. We can protect it with internal controls, which are procedures within the business that are designed to protect your cash and other assets and keep reliable records. You can actually see a full list of them on page 281, but some things might be having more than one individual handle that cash, having more than one person count it to make sure that nobody's taking some, or maybe having your employees bonded. Bonded means that another company would come in and do a background check on your employees to make sure that they are reliable. They don't have a past criminal history. They don't have any financial stress going on right now, because if they had financial stress, they might be more inclined to take money. A lot of banks will do that, but companies can do it as well. Some other things is they might have you make deposits on a daily basis as opposed to once a week, so that you don't have any extra cash sitting around. External controls are the measures and procedures provided outside the business to protect cash and other assets. So the things that the banks are doing, possibly the banks or wherever you're keeping your money, are doing to keep them safe. They do that through having signature cards, or checking the signatures, or maybe or becoming FDIC insured. The Federal Deposit Insurance Corporation insures banks for every account they have up to $200,000 to make sure that they're not misspending your money. Now, you may not realize this, but the money that you put into a checking account does not just sit at the bank. They take that money and they invest it in other things so they can make money. And when they make money, then they give a portion of it back to you as interest. But the FDIC comes in to make sure that they're making appropriate, or they're doing appropriate transactions. Let's talk about a checking account. A checking account holds cash deposits made by the depositor. That's the person who has the checking account, who's putting the money in. Whether it's a person or a business, and allows them to write a check against the balance. An account that allows a person or business to deposit cash and then write checks or make ATM withdrawals. A depositor is that person who does it, and then the check is that actual written order. It's like a message to the bank that whoever has this check can cash it in and take some of my cash out. When you start a checking account, you will have to fill out a signature card. A signature card simply says who is allowed to write checks. If there's any question as to whether or not somebody is allowed to write a check, they will go back to the signature cards. Now, they don't check the signature cards every time somebody writes a check. Rather, it's only if there's a question about it. So you need to keep careful track. If you've got a checking account, you need to make sure that there aren't any checks being cashed that you didn't write. If there's something that you didn't write, then you need to go back to the bank and have them check the signature card, because it's possible somebody had gotten a hold of one of your checks. Here's an example of like a business checkbook. You're probably used to a small pocket or purse-sized checkbook, but this is a business checkbook. You might have multiple checks on a page. It would have some sections over here on the side that are your check stubs. You should be familiar with that term because we used it as a source document. There's perforations between the checks and between the check stubs and the checks. Once you write the check, or actually you fill the check stub out first, then you write the check, and you would rip the check off and send it, you would still have the check stub with all of the information. Notice that the checks are numbered in sequence. Here's a little tip. If you're starting a checking account and they ask you what number you want to start your checks on, you ask for a larger number. And the reason is checks are not legal tender. People have to accept payment from you if you give them cash. But if you give them a check, they don't have to. If you have a smaller number, they may not take your check because they think that it's a fairly new account and you may not have much money in it. But if you have a larger number, they might be more inclined to actually take your check. I realize it's being somewhat deceptive, but at the same time, if you're given the opportunity to have a larger number, take it. Here is a check, and we're going to take a look at some things that you might see on here. This number right here is considered the ABA number, the American Bankers Association number. It indicates a couple of things. It tells us what bank it belongs to and what branch it belongs to. If you'll notice down here, these numbers also appear down here. The bottom ones are 3222, and then we have our top ones 71627. Those are your routing numbers as well, so that we know where we're supposed to be getting the money from. This is your actual account number, and this is your check number down here. Here is an example of a deposit slip. Now, not all deposit slips will look like this, but they'll look similar to this. You'll have a place to put your date. Sometimes they'll have a line right here that allows you to sign it and say, I want some of the cash back from those checks. You'll usually have a place up here to put your currency. Sometimes it's divided up between coins and just dollar bills, but this one's all together. And then you have a place to write some checks. Usually most deposit slips don't have this many lines on the front for the checks. Rather, they have 2 or 3, and then if you have more than that, you have to flip it over and write the others on the back and bring the balance forward. Notice here that we don't put anybody's name for the checks. Rather, these are the ABA numbers. I'm going to go back over here. So they would have taken these numbers right here at the top and written them right here to correspond with a check. This is what you would put in, or this is what you would take to the bank with your checks and your cash so that they would know what account to put the money into. Just a little, it bums me out that we're not having this conversation because I love this particular unit with the class because we get to share a lot of stories and talk about a lot of different things. But one story that I will share with you, a number of years ago, I heard of a gentleman. These right here are magnetic numbers, and they help process the transaction a little faster, either for the deposit or if we go back here for the check. Well, if this gentleman went to a bank, and if you have ever been to a bank, you know that they have kind of these tables set up in the middle of the lobby. And they often have these blank deposit slips, and you can fill in your own account number. Well, he, for whatever reason, I'm not sure how or why, he had a machine that printed these numbers. And he casually walked into a bank, grabbed some deposit slips, walked out, and then he printed his account number at the bottom of them. He then took the deposit slips and put them back in the carousel or the station where they could write deposits. People pulled the blank deposit slips, filled them out, wrote their account numbers in there, didn't pay attention to this. Because these numbers were down there, they ignored all the writing with the account numbers and they just processed it and the money went directly into his account. Now eventually he was discovered because somebody was wise and realized they didn't get their deposit, and so they went to the bank and checked and they were able to trace it back to him. So, moral of the story, check your deposit slips and make sure there's no magnetic numbering at the bottom that doesn't correspond with your account. If you get a check, you need to deposit it, or you need to endorse it in order to deposit it. An endorsement that includes only the signature or stamp of the depositor. It does not specify the new owner of the check. There are 3 types of deposits. We're going to talk about all 3 of them. The first of them is probably the most common, but it's not really safe. A blank endorsement that includes only the signature or the stamp of the depositor. It does not specify the new owner of the check. So it's one like this, where they just simply write their name on the back of the check. If you do that and you're not at the bank, and between wherever you wrote it and the bank, you lose that, this is like cash. Anybody can pick up that check, take it to the bank, and cash it. This one down here, a restrictive, is the safer of the two. It's a check endorsement that transfers ownership to a specific owner and limits how the check may be handled. So in this case, they wrote for deposit only, the name of the company, and put the account number. And that means if it got dropped somewhere, somebody would pick it up, and if they tried to deposit it, the only thing they could do is put it in Zip Delivery Services account. The last one is not one that we see very often. It's called a special endorsement, a check endorsement that transfers ownership of the check to a specific individual or business. So in this case, it says pay to the order of Harold Kaufman, Rita Jane. Let's say Mrs. Ross needed a babysitter, and I was willing to babysit for her. And somebody had given her check for maybe $20. Maybe she had gotten a check from somebody else. If she didn't have the money to pay me, she could actually take that check and she could write pay to the order of Janelle Larson and then put her name, Natalie Ross. And when that happens, that check now becomes mine, and I can take it to the bank, endorse it, and cash it. But it's only when you say pay to the order of and who you're going to be giving the check to. Let's take a look at a check stub. You may not be familiar with how these are filled out, but notice that there's two parts here. There's this top part up here, and then this bottom 2/3. This part up here is a reflection of the actual check. It says how much the check is for, when we wrote it, who we wrote it to, and why we wrote it to. Look at all the things that we need in order to write a journal transaction. We could say that rent expense was debited for $700 and cash was credited for $700 on October 16th. Now down here, we're keeping track of what actually happened in cash. Prior to this check, we had $21,650. Between that balance and when we actually wrote the check, we actually made two deposits. One on the 14th and one on the 15th. One was for $200 and one was for $1,200. This area right here is for anything that might have happened between the last time we wrote a check and this time we wrote a check. When we're ready to fill in this amount, we would subtotal our previous balance with our deposits and possibly any deductions that we might have had. And then we're going to subtract our check of $700 to have a new balance of $22,350. We then bring that down to the next check stub. Now, they deleted the check from here, but in theory, we should have this here. The check should still be here, and it's just going to wait here until we write our next check. When we write, maybe before we write our next check, we might have a deposit. We might have a service charge that we have to subtract. We're going to record that. Once we write the check, however, we're done recording deposits and service fees. Then we're going to calculate our total and finish it out down here. How to complete the check? Well, you need to write out the date, write who it's to, and then you're going to write the amount. Now, there's a couple of things that I don't like about this. First of all, there's a little extra space in here between the $sign and the 7. Now, a bank teller is supposed to compare this number to this number, but when you're taking in lots of checks, that doesn't always happen. And somebody could take your check and put maybe a 1 or even a 2 there, and they would give them $2,700 or $1,700. That's a big difference from the $700 that you wrote to them. So the closer you can put your numbers to the $sign, the better. The other thing is you want to avoid having this .00. Rather, you could write maybe 00 with a line under it. Put 00 up a little higher and then a line under there, so that it's not easy for them to just put a comma and another 0. Notice here that we're writing it out, 700 and then you indicate the number of cents using a fraction, and then we use a line here to draw to the end. You don't have to include a memo, that's only for you, but you do have to sign it. The drawee is the bank. that we're taking the money out. Oh, nope. This is our drawee. The drawer is the person who signs the check, or the company that's taking the money out. Oh, thought there was something else. Let's talk about voiding a check. Sometimes we write a check and then we don't need it. When you're voiding a check, you don't want to just rip it up. You want to actually make it void by using ink and writing the word void right across the top of it. On page 286 of your textbook and page 216 of your workbook, we're going to be working through the problem where you're going to be actually making a deposit and then writing a couple of checks. First thing that they ask you to do, I'll put this up here for just a moment. It says on August 14th, Loretta Harper, owner of Peabody Cards and Gifts, deposited the following items in the checking account of the business. So they deposited these items right here. Using the forms provided in your working papers, complete a deposit slip. Then record the deposit on check stub 41. Record the information for paying the telephone bill on check stub 41 and then complete the check. And complete check 41, and then we're going to prepare the check stub for check 42 to pay the bill for advertising and use August 17th as the date. So we're going to be using this information here. I want you to follow along. The first thing we're going to be doing is creating that deposit slip. This deposit happened on August 14th of the current year. They had $784.29 in cash. So we would write that right here. And then we're going to begin listing our checks. We have 4 checks. Remember, we're going to use our ABA number here. The first check is from Charles Ling. The ABA number is 32-7091. So I would write 32-7091, and it was for the amount of $39.44. The next one is from Keith Lopez, ABA number 84268 for $22.95. Marjorie Luke, ABA number 846249 for $52.95. And Maple Parker, 84, looks like these are all coming from a similar bank, 2242 in the amount of $67.45. At this point, you would then add up cash plus all of your checks. I'll give you just a second to add those up. Stop the video if you need to. And the total deposit then is $967.08. Now the next thing we would do is automatically, because this is going to go to the bank. This is going to go to the bank with our checks and our cash, and we'll never see it again. If we don't see it again, we won't know what to record in our journal. So we're going to take this amount, $9,067.08, and we're going to record it on our next check stub. We made this deposit on August 14th, so I would write the August 14th there, and then record 96708. At this point, I'm not going to fill anything more out on this check stub. I'm not going to do the subtotal yet because I might have another deposit, or I might have a service charge that I need to deduct before I write the next check. So I'm just going to let it sit there. Going back to our book, it says we're now supposed to write a check for the July phone bill to Northwest Telephone in the amount of $214, and that's going to happen on August 15th. Well, Nothing has happened between our deposit and August 15th, so we're ready to actually fill out the rest of this check stub. Remember, the first part of this has to do with the check. The bottom part has to do with how much cash we have in the bank. We're gonna fill out the check part first. The check was for $214.80. It happened on August 15th. We are going to write it to Northwest Telephone. For the July bill. Now we're ready to complete this portion of it. If I had $1,641.96 and I added a deposit of $9,607.08, it means that I currently have $2,609.04. You should have used your calculator to get that, but I kind of gave it to you ahead of time. Now it says less this check. That's when we're going to get this amount, $214.80. And we're going to subtract that from our subtotal here, which brings us down to a balance of 2,000. Well, that doesn't look right. I wrote this one wrong, didn't I? Bear with me, people. Bear with me. Let me get my calculator out here. Did I do that right? 1,641.96. Oops, excuse me. 1,641.96 plus 967.08. Yep, we have that right amount. Then we're going to subtract 214.80. And that gives us $2,394.24. Okay. You're then going to take that balance brought forward and you're going to bring it here. This one says carried forward, this one says brought forward. It's the same number. We're going to wait there. Because before we write this check, we may have a deposit or we may have a service charge. We don't, however. The last thing they ask us to do is write a check to Bayside News on August 17th. Since we didn't, we're going to fill out the top portion first. It is for $275 on August 17th. We're making it out to Bayside News. Oh! People, just FYI, it's late and I'm doing this and I completely forgot to write the check. So let's go back up here, forget that I did this, let's actually write the check. This is on August 15th. I'm going to pay to the order of Northwest Telephone. $214, and then look how I do the 80. I just put it a little higher with a line under it so that it's not easy for them to put a comma in there. Then I write it out, 200, and actually write 14 and 80 over 100. I could put July bill if I wanted to, but I don't have to. And then I would just sign my name. You can sign yours. Now, after we've sent this off, then we're going to come back here. Remember, we're filling out the top portion for our next check. It was for $275 on August 17th, Bayside News for an advertising bill. Since we didn't have any deposits or service charges, we can just bring this total down and we'll record our check down here. And if we subtract 275, we end with $2,119.24. This is what we would carry forward to the next check stub. Now that the check stub has been completed, we're going to write the check. This was on August 17th. Bayside News. Write it close to the dollar sign. 275. And you can put 00 or you can use the word no for no cents. And then sign it. Okay, we're back and going to talk about part 2 of cash controls, and that is bank reconciliation. Think in terms of two friends that might be at odds with one another. They might be having a fight sometime. In order for them to get along and to agree, they have to come to some sort of reconciliation. They have to work out their differences. Well, that's what's happening with the bank. The bank is aware of certain things that are going on in your checking account, and you, as the checking account owner, know of other things that are going on. And because they're separate and because you might know of different things, you both have different balances, and we need to get it to the point where all of our balances match. The bank statement, let me get my thing here. The bank statement here knows about, knows the checking account balance at the beginning of the period. It has a list of all the deposits that you've made and a list of all the checks that have been paid by the bank. Not necessarily any of the checks that you wrote that they didn't pay. There are some people that hold on to checks for a long time. So if you wrote a check to somebody and they haven't cashed it, the bank won't know about it. They might have a list of any other deductions, like a return check from somebody else or a service chart of some sort. The checking account balance, it also has a checking account balance at the end of the period. It's an itemized record of all the transactions in a depositor's account over a given period of time, usually about a month. It doesn't always start on the first of the month. Sometimes it starts in the middle of the month, but it's about 30 days. The bank usually returns canceled checks as image checks with the bank statement. Now, when I first got my checking account, every month I would get an envelope about this thick or however many checks I wrote. And it would actually send back the checks. They don't do that anymore. Instead, they just make images of them. But a canceled check is one that you've given to somebody else, they've cashed it, and the bank has paid them, so now the check is canceled. Reconciling the bank statement is also known as bank reconciliation. It's the process of determining any differences between a bank balance statement or between the bank statement balance and the checkbook balance. In banking terms, the word outstanding means not yet received. It doesn't mean really great. It means that a check has been written but has not yet been presented to the bank for payment. Those are the checks that the bank is not going to know about. An outstanding deposit is a deposit that's been made and recorded in the checkbook, but it doesn't appear on the bank statement. Now, this isn't going to happen very often, but if you happen to take your deposit in on the very day that they're printing your bank statement, there might be a little bit of an overlap there. So you might know about the deposit, you might think you have money in there, but the bank doesn't know you have money in it. Or at least when they send you their bank statement, they don't know about that. Occasionally, you're going to get a service charge as a fee that the bank charges for maintaining bank records and processing the bank statements for the depositor. And if that happens, we're going to put it over here in this little section over here on our check stub. And this time we're going to say less a service charge. Sometimes it's 8, sometimes it's 10, 20, depending on your bank. Now, the bank makes it easy for you to reconcile your statement. Usually, when I had my checking account, they would send me a paper copy, and on the back of it, there was a form similar to this that I would just have to fill out to see if what I thought I had was the same as what they have. Now that they're electronic, I believe on most bank websites you can actually get a form similar to this. If not, you can just simply go through this process. But it's very simple. It tells you exactly what to do. The first step is to record any transactions appearing on this statement but not listed on your checkbook. Well, that might be, what you would do is you would record this in your checkbook. If the bank statement said that you had a service charge of like $8, you would take that and you would write that in your checkbook as a minus $8. That's what we did over here on your check stub. The second thing is you're going to list checks still outstanding in the space provided to the right. So in this area right here, you're going to compare your checkbook to the bank statement. If there's some checks in your checkbook that the bank statement doesn't know about, you want to list them here and then total it up down here. Number 3, you're going to enter the balance shown on the bank statement. So you're going to look at the bank statement, find out what their ending balance, and write it there. Number 4, you're going to enter any deposits recorded in your checkbook, but not shown on this statement. So you compare. Look at the statement, look at your checkbook. Were there any deposits that the bank didn't know about? If so, record it here. Total those two. This one didn't have any, so we just brought it down here. Number 6, it says enter total checks outstanding here. So we're going to take our outstanding check total and put it here, and we're going to subtract it from our subtotal, and that's our ending balance now. Hopefully this will match your checkbook records or your last check stub. Now the last thing I'm going to show you is how we would record that in our general journal. Remember, we have 3 places that we're keeping track of cash. We're keeping track in our general journal and in the cash account. We're keeping track of it in our checkbook. And the bank is also keeping track of it. And we want to make sure that all 3 of them end up with the same balance. At this point, we've only changed the checkbook. This is where we would change the general journal. There was a miscellaneous expense. Hopefully everything else is recorded in the journal, but this is the one thing that the bank had, and that was that service charge of $8. So we're going to record it as a miscellaneous expense. Cash and bank went down by 8, and our source document was our bank statement. Let's see here. Oh, non-sufficient funds. What is a non-sufficient fund check? It is a check returned to the depositor by the bank because the drawer's checking account does not have sufficient funds to cover the amount. It's also called a dishonored check. So if I were to write a check to Come and Go, and I don't have enough money in my account, Come and Go will cash my check. The bank will put money in their account for that check, and then they're going to send that check to my bank. At that point, my bank is going to say, hey, she doesn't have any money. So then they're going to send it back to Come and Go's bank, and Come and Go is going to have that money taken out of their account because there was non-sufficient funds in my account. So it will originally be put into their account, and then it will come back out. We're going to work together to complete problem 11.5, and then you'll do one on your own. On October 31st, George Flom, the accountant for Kits and Pups Grooming, received the bank statement dated October 30th. We don't see a picture of the bank statement, but he went through it. After comparing the company's checkbook with the bank statement, George found the following. First of all, the checkbook balance on October 31st is $960, but the ending bank statement is $1,380. The bank statement shows a service charge of $10 that our checking account doesn't know about. A deposit of $405 was made on October 30th, but it doesn't appear on the bank statement, probably because we took it in after they printed the statement. And checks 768 for $529 and check 772 for $306 are outstanding, meaning we wrote them, but they don't appear on the bank statement. Using this information, we're going to record the bank service charge in the checkbook, reconcile the bank statement, and then journalize the appropriate service charge on the journal and then post it to the ledger accounts. So turning to, actually, we are not. We're going to do this, and then I'm going to let you critically think through the journal account because I didn't make a copy of it and I don't have time to do that now. So starting with the first instruction, it says, we're going to work our way through here. It says, record any transactions appearing on this statement but not listed in your checkbook. Well, if we go back to instruction number 1, it says there was, the first thing listed, it says a checkbook, number 3, a bank statement. People, please forgive me. This is not going well. Number 3 says the bank statement shows a service charge of $10. So we're going to less a service charge, $10. Now normally we wouldn't write the total because we're not writing a check yet, but if we were to write the total, our balance would now be $950. That's our goal. We're hoping to get our bank statement down to $950. Number 2 says, list any checks still outstanding in the space provided to the right. Well, in our list of things that he found, number 5 says they were missing check number 768 in the amount of $529. And check number 772 in the amount of $306. For a total, let's see here, 835. Number 3 says, enter the balance shown on this statement. Well, in the list of things that he found, number 2 says the ending bank statement was $1,380. Number 4 says, enter deposits recorded in your checkbook but not shown in this statement. Well, it says in number 4, a deposit of $405 does not appear on the bank statement. The next step is to total lines 3 and 4. So we have 5, 8, 7, 1. The last thing it asks is to enter the total, or excuse me, not last thing, but it says enter the total checks outstanding here. So we're going to take our 835 and we're going to subtract it from our cash, our total there, 1785 minus 835, leaving us with $950. So right now, our checkbook and our bank statement match. The only thing that doesn't match is our general ledger. And you're going to have to record a journal entry that records this service charge of $10. And once you record the journal entry, you'll then post it to the miscellaneous expense and to cash. And when you post it, your cash account should end up with $950. You're going to have to do the remaining portion of this and check your work with the answer key that's provided.